Hi, I'm Marcus. This is your market wrap-up for the week 14, and for the past 1 week, Cyprus remains in focus. And major averages ended on Monday with a headline-filled session in modest losses, and the S&P 500 settled lower by 0.3%. Equities began the day amid broad strength, with the early gains coming after Cyprus and the Eurogroup agreed on the terms of a rescue package for the island nation. The early gains did not hold past the opening hour after the Dutch finance minister and the Euro head gave an interview to Reuters in which he explained how the Cypriot bank restructuring may be used as a template for future bailout talks. Growth-oriented sectors were responsible for the bulk of Monday's losses. The industrial space ended as the biggest laggard amid broad weakness. Machinery producers lagged throughout the day, and the Caterpillar lost 0.9%. Tuesday ended with firm gains, and the S&P 500 settled higher by 0.8%. After starting the day on a positive note, the benchmark average spent the balance of the session in the 6-point range. Energy was the only economically sensitive group which settled among the leaders. Crude oil contributed to the sector's strength as the energy component climbed 1.5% to $96.26. Meanwhile, the Spider Energy Select Sector (XLE) ended higher by 1.1%. Well, Wednesday's session saw the S&P 500 overcome early losses to close lower by only 0.1%. The index began the session lower by 0.8% as European worries remained at the forefront. The future of the Eurozone was questioned as market participants speculated whether or not the European Union will copy the Cypriot bank playbook next time a troubled nation is in need of emergency assistance. Bank stocks reflected the uncertainty surrounding the Eurozone. While most sectors ended the session well off their lows, banks settled near the bottom of today's range. The Spider Financial Select Sector ETF ended lower by 0.5%, and JP Morgan Chase was the weakest performing among the majors. Shares of JP Morgan fell 1.8% to close below their 50-day moving average. The major averages ended the last session of the holiday short-term week with slim gains. The S&P 500 added 0.4% and notched its highest close of all time, eclipsing the previous record close set on October 9, 2007. The day began on a rather uneventful note, but a flat open was followed by a brief stumble which sent the S&P 500 into negative territory after the latest reading of the Chicago PMI missed expectations. For March, the Purchasing Managers Index fell to 52.4 from 56.8 reported in the February report. Although equities settled with gains, today's advance was paced primarily by defensively minded groups. Healthcare and utilities led the broader market for the duration of the session and ended as the top-performing sectors on the day. Notably, the health sector ended the month as the top-performing group. Having gained 15.2% year-to-date, the sector is also the best performer so far in 2013. In summary, the S&P 500 index finished last week at the record high level of 1,569, securing an impressive 10% gain for the first quarter. The Dow Industrials also ended the short-term trading week strong, closing at 14,578, accompanied with anemic volume as several traders remain on the sidelines ahead of a long weekend. The best performing sector for the first quarter included the airline, railroad, and biotechnology indices. Gold, mining, and coal indexes all suffered double-digit losses during the same period. The closely followed Cyprus banking crisis appeared to begin showing some signs of containment as the ECB and the IMF were willing to lend 5.8 billion euros to the near-bankrupt member prior to last Monday's deadline to avoid further contagion within the Eurozone. Local banks finally reopened their doors on Thursday and have slowly begun allowing a mere €300 daily withdrawal limit for customers in order to regain some confidence without allowing for an irreversible run on deposits. The Chicago Board of Option Exchange Volatility Index WIX finished the week at the lower range of 12.7. The 10-year yield also finished at a low tick for the month, falling to 1.85% after rising above the 2% psychological level earlier in March. Oil futures quietly climbed to month highs and again threatens to break above the psychological $100 barrel threshold. The recent development has the potential to slam the brakes on several high-flying transportation stocks. Well, with earnings season not ramping up for another week, we anticipate the BC economic release schedule to set the tone for the market sentiment in this coming week. Investors will look to ISM and key employment updates to validate these record levels. Several FOMC speeches, including Chairman Bernanke, will be dissected throughout the week to interpret any dissension within the group regarding near-term rate change or monetary easing plans. Well, this is the end of your market wrap-up, and I'll be seeing you next week. Bye.